After announcing that it was shrinking its IPO size yesterday, Lotte Chemical Titan Holding has set the offer price for its share at 6 ringgit 50 cent, 23% lower than the initial announcement of 8 ringgit. According to reports, it was soft investor interest that led to Lotte pricing the IPO on the lower end of the band. However, Lotte said that for those who had successfully subscribed at the original 8 ringgit, a refund of 1 ringgit 50 cent per share would be given. Lotte said that out of the 3.77 billion IPO proceeds, 2.81 billion would go to financing its integrated petrochemical facility, adding that the change in proceeds would not affect its ability to fund this development. Kumpulan Jetson's share price plummeted after the group's almost billion ringgit subcontract was taken back. Jetson's share price had dropped 18.6% to close at 35 cents. MCC Overseas Malaysia had unilaterally rescinded the award of a 919.3 million ringgit contract following allegations that there had been a misrepresentation or non-disclosure on certain matters. Specifically, that one of the company's substantial shareholders is a director of a third-party consultant to the project's employer. However, Jetson fired back, saying that MCC had not given the company an opportunity to respond prior to the cancellation. As such, Jetson denies any misrepresentation or non-disclosure or wrongdoing giving rise to such rescission. The company believes that MCC had repudiated and wrongfully rescinded the subcontract. It is seeking legal advice on this matter and will take appropriate action in due course. The deal involves a subcontract to undertake main building works for a mixed commercial project on Jalan Conley. Texchem Resources saw its shares fall 3% today as investors reacted to the closure of famous dim sum chain Tim Ho Wan in Malaysia. Texchem's 51% owned subsidiary Dim Sum Delight, the operator of the famous Michelin-starred eatery, shuttered its 2 outlets after incurring almost 900,000 ringgit in losses. Yesterday, Texchem said, given that the current retail market remains soft and competitive, the board of Dim Sum Delight is of the view that the prospect is very challenging and this situation is not expected to change anytime soon, which is why Dim Sum Delight is ceasing business operations to minimize losses. Texchem's share sank to as low as 1 ringgit 38 cent today before closing at 1 ringgit 41 cent. The National House Buyers Association is warning of a looming housing crisis, saying that the middle-income group is in dire need of rent-to-own schemes. Honorary Sec-Gen Chang Kim Long said most new launches don't fall within the affordable range. And by affordable, he means 150,000 ringgit to 300,000 ringgit with a build-up of at least 800 square feet with 3 bedrooms. He warns that if this situation continues, Malaysia will form a homeless generation where entire generations would not be able to afford homes. He adds that a rent-to-own scheme would greatly assist the so-called sandwich generation because legally owning a house would provide financial security in their golden years, so even when they aren't economically active, they no longer bear rental costs. He suggests that the government could alienate land to responsible housing developers at a lower price or lower conversion premiums, but on the condition that at least 70% of the land is used for affordable housing, or it could offer fast-track approvals for projects involving affordable housing. Chang also advocates for the cost to lay the last mile of utilities for housing projects to be borne by the utility companies, as they are corporatized or privatized. Aeon Credit Service Malaysia had a solid quarter with net profit jumping 20.9%. First quarter earnings came in at 75.8 million ringgit compared with 62.7 million last year. Revenue grew 15.5% from 261 million ringgit to over 302 million ringgit. The group had an improvement in operating income of 13%, as well as a lower ratio of operating expenses to revenue at 58.2%. Going forward, the group is expecting this momentum to continue into FY18 based on the scheduled implementation of its business plan.